The euro versus US dollar is lower, as is the pound sterling, ahead of their interest rate decision. The dollar versus yen is also lower, indicative of a mixed dollar picture for the three major currency pairs. The Bank of England decision is up next, with expectations of no change in policy. Yesterday, the Federal Reserve kept their rates unchanged. Swiss National Bank cut the rates by 25 basis points in trading here today. So what are the technicals for those three major currency pairs telling us? I'll go through it in this video, so let's get started. Looking at the 4-hour chart of the euro versus US dollar, I want you to focus on this area right through here. And as you can see, that this area was a support level through here, and then became a resistance level here before moving to the downside. We returned to the level right here and then moved to the downside once again. It wasn't until last week that the price moved back up to that area right through here and found willing sellers once again down toward the 61.8% retracement. Remember that 61.8% retracement. The subsequent bounce in trading this week, as I saw the price earlier this week move up to the swing area once again. This area comes between 1.0936 and 1.0954. As long as the price remains below that level, the bias remains to the downside, and that's what traders did right through here, finding willing sellers against that level before finally breaking to the downside. And trading yesterday through the FOMC rate decision, we saw a move to the downside. It saw a move to the upside, and trading here today we see further move to the downside as the market takes a cue from up here and decides to sell the price back to the downside. So what do we know? Well, we know that there's a resistance up here, and we know from the trading in last week that there's support at the 61.8% retracement down here. So that's going to be the bookends that traders will be watching for either a break to the upside or to the downside. As mentioned, the buyers had their shot to get above the top side. They couldn't do it, so now the sellers are trying to make their shot, take their shot. If it doesn't move below that level, then we'll look for this swing area down here, followed by the rising 100 bar moving average on the 4-hour chart and the 200-day moving average. These are going to be key levels on the downside as well. So watch 1.0960, 1.0976, and then the 100 bar moving average, 200-day moving average. Those are going to be key levels on the downside as well. If the price can get below the 61.8% retracement, that's going to be the key in trading here today. That'll be the key barometer for your trading here today. Let's take a look at the hourly chart of the dollar versus yen. And in trading yesterday after the FOMC rate decision, with the yields moving lower and Powell being somewhat neutral, not very hawkish about things, impacts of tariffs, so on and so forth. We did see the price move back below the 100-hour moving average. That's a blue line in this chart, and we stay below that level in trading here today, but the price action has been down and up, and we did move below the 200-hour moving average. That's a green line in this chart. We based against it here before moving to the upside through here, but the price tried to stay below that 200-hour moving average, but could not do it. And now we're back above it and trading up to this swing area right through here, finding willing sellers again. So there's kind of this wishy-washiness about the dollar versus yen that you have to take into consideration in your trading with down and up price action. But you can probably use this swing area as a resistance now. If you break below the 200, look for further downside momentum to continue for this pair, which could see the price move back down toward our low prices if we're able to stay below the 200-hour moving average. If we can't do that, if we start to move back above the swing area right through here, then we're in the battle between the 100 and the 200-hour moving average in the dollar versus yen. So be aware of that dynamic as well. Finally, let's take a look at the sterling versus US dollar. As mentioned, we do have an interest rate decision coming up. But first, I want to take a look at the 4-hour chart, and as you can see, the price moved above this swing area. It's been a bit messy. We're also back above the 61.8% retracement level. Maybe you can use that 61.8% retracement as a close barometer for more bullish above, more bearish below. In trading this week, we spent most of the time, if not all the time, just above that 61.8% retracement on Monday's trade. Use that at 129.22 as a barometer for if we move below, it's more bearish. If we stay above, it's going to be more bullish, and we'll keep this move to the upside going. Watch that level. If we do break below the 61.8% retracement momentum, then the next key target comes against the rising 100 bar moving average on the 4-hour chart, followed by this swing area just below it at 128.30 to 128.43. 128.49 is the 100 bar moving average. And then, of course, we have the 200-day moving average. That 200-day moving average comes in at 1.2798. We traded above and below it here. It wasn't last week, it was a week before. And then saw increased momentum to the upside. So the buyers are in control above that moving average, and they've taken control. The question now is, can we hold the 61.8% retracement and keep that momentum going, pushing up toward this next swing area up through here? Or do we break below that level and start to come back down to these support levels? That's going to be key for the sterling versus US dollar. And we'll see if the interest rate decision by the Bank of England forthcoming pushes that pair in either direction. So there you have it, a technical look at the three major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Look forward to your trading. Bye-bye now.